Hey, it's Michael Saul with the Stock Market Trading Watch List for Monday, November 7th, 2011. Let's take a look at some indexes, some sectors, and some stocks. So we'll start with the S&P 500, and we got some Fibonacci grids overlaying on each other here. But this grid is measuring the last little swing down, and it comes out at 1276 and change. It's a 78.6% retracement of that swing. So if we get above that, it's suggested that we at least go to these highs. This 78.6% level is the swing from the high of year down to low of year. And if we get through that, it is suggestive that we go to a new high in the year. Now, I am still bullish here. All right, we had the follow-through day, and that said that this correction was over. Yes, we're still below the 200-day moving average, but the follow-through day the correct follow-through day, right? I mean, and that's a scary word, but the way that I at least interpret it, and that's based on more on following what IBD says than anything else. I'm not putting my own slant or twist on it. I don't try to reinvent the wheel. It's just silly and a waste of energy. But, that tells me that, hey, the correction is over and that we're going to resume the uptrend here. So even if we were to push down, unless we were to take out this 78.6% retracement, I would remain looking for buying opportunities. Now, that doesn't mean, we're weak, it's time to buy. No, that's not the plan that I had. That wasn't the plan that I had last week. After this nice down day, I was looking for more downside, and we got it. I'm not sitting here saying, I knew this was going to happen. No. What I'm trying to say is that I'm not looking at every single dip down as every single down day as a buying opportunity. All right. So if we were to push down and maybe form something like an A, B, C move, then I'd be watching for support to come in, and I'd be looking for confirmation for a potential bounce. All right. So unless things change, unless we get a lot of down volume, a lot of distribution days, a lot of ugly breath, then maybe I would change my mind and move back to neutral and then see if this level held. But as of right now, I am still leaning to the long side. By the way, there's my blog, and there is the website to go sign up for the daily email. Here's the NASDAQ 100. All right, just oscillating around this 78.6% retracement line. This is the yearly range. So if we can get back above it, get back above these highs, it's suggestive that we hit those highs. I mean, it's suggestive now that we do because we were over the 78.6% retracement for a little bit. So it does say that we should hit the highs on the year. But as of right now, since we're not really going anywhere, it's always a good idea to exercise a bit of caution here. And like I said, looking at the S&P, I'm bullish here, but I want to see some confirmation here before I get all crazy and let's just go full on, here we go mode. Okay, the Russell also with consolidation of some sort, 200-day moving average still sitting in the way. If it can breach that, that would be nice, and see if we could get a nice push on the Russell too. I don't do a lot of long-term forecasting, but here's how I see things possibly panning out here. I don't know if we're going to get weakness first or we're going to go from these consolidations, but what I think happens is I think the S&P attacks that 78.6% retracement and may get right through it. Okay, I think the NASDAQ 100 makes the high first, which is not going out on a limb. It's the closest one, right? Then the S&P, and then I think from there we consolidate a bit, and I think the Russell plays catch up, and I think this ends the year, right, into the Santa Claus rally / end of year move, with the Russell finally taking over the outperformance. And that's when the January effect will kick in. And, I know a lot of these super gurus that charge exorbitant extortion-like fees for their lists, they want to make the January effects out to be some big magical formula. But what it is the small caps outperforming the large caps. And that's the tendency that the market has over the years. All right. So that's what I think could happen. Now, I could be completely, totally wrong here, and that's great. But as of right now, I'm watching, what the charts are saying here. And In order for the market to get a real head of steam, that seems like a possible scenario. But like I said, the first part of the scenario is what's going to happen first. Are the S&P going to break first, or is it going to pull back first? That remains to be seen. But like I said 5 minutes ago now already, or however many minutes ago, I'm still in bullish mode here. Okay, let's look at the sectors. Semiconductors, 200-day moving average is going to be key for them. See what we do there. The banks. All right, banks, not a great day, down 1.5%. And, these are not inspiring candles here. This is a little coil as well. Are we going to get some expansion here like we saw back here, or are we going to pull back to the 50-day? Look at a couple quick stocks. Bank of America. Yeah, just not looking so hot here. All right, not looking so hot. Could be more of a bearish flag here, bearish pattern, bear flag here. All right, so if this confirms, it's not going to be too great for the upside here. If it brings down the banks with it, and that could lead to that S&P weakness that I've been mentioning. And like I said, I would still be bullish unless we saw some really bad volume and bad leadership. But otherwise, I'd be looking for weakness as a potential buying up, like I said. Okay, Bank of New York. Yeah, these are just not really nice looking charts here. Here's Northern Trust, Zion. Okay, there's the broker, dealer. All right, and also not that nice looking. Here's Goldman. I mean, holding the 50-day is good, but it's got to move here. Right? Don't like this consolidation after the gap down. Okay, don't like that at all. So it has to move. It's Morgan, like Mason. Okay. The cyclicals, look at them. Yeah, I mean, okay. They're over all the moving averages except the 200. So they're over the short-term moving averages. I can draw the pattern like the S&P. Okay. There's the XLB. They're also okay. Wait to see what's what here. Excuse me. Okay. The healthcare, okay, over the 200-day. And remember how weak this was acting, right? Hit the new low and then boom, now it's over the 200. See if it can get some upside movement. Okay, there comes Aetna, right, over the 200-day. Look how the moving averages are all grouped together. Okay, so this one, coiled. WellPoint. Yeah, this one not looking as nice under the 200-day. HealthNet. See if it can get up over this little swing here. See if we can get a push. Got resistance here. Previous support at 29.36. All right, GLD over the moving averages, but nothing super here. Still has resistance at 173.14. Here's silver, still in what looks like to be a bearish consolidation. Okay, but now it's getting a coil inside a coil. So let's see what happens here. All right, can move out of this coil. Okay, OIL. Okay, we highlighted this pattern last week and starting to go watch that 200-day. OIH. Okay. Another stock or whatever, ETF. But something else we're looking at that's over the moving averages except for the 200-day in a coil. Okay. Get some usual suspects, and then I got a nice little list to go through as well. Apple. Boy. Remove this. And remove this. I guess we could draw new lines in. Something like this for resistance. Now it's looking a little bit. Do something like this. See if we can get above this 410. Okay. Amazon. All right, Amazon in a nice A little coil here. 50-day above. Roll over back here. You got the 200-day down there to watch. But if it pops up, watch that 50-day, and then we got the gap here. 225.89. Google. Yeah, oscillating around the 78.6. Should be making a move one way or the other. Baidu. Wow, look at these candles. A lot of wicks. A lot of wicks. Okay. Price line. Yeah, over the moving averages, but I don't really see a pattern here. Chipotle. Let's see what this wants to do. If it wants to kick it up here. Netflix. 20 EMA if it can continue higher. Potential resistance. LinkedIn. Yeah, not really doing much here. LinkedIn. Hewlett Packard. Okay, yeah, got the 89 EMA held as resistance. All right, Ford. Okay, little consolidation there. Watch the 50-day for support if it decides to dip. Okay, what else did we want to look at? Ross Stores. Okay, Ross Stores on a nice move higher here. It's continuing to ratchet higher here. And one reason, look at the retail index. It's been one of the better performing indexes, even though now it's in a consolidation. But if this decides to break higher, especially if the market's backing it up, watch that ROST. The Ross Stores is one of the potential leaders. Here's Research in Motion. Yeah, this thing has 15 written all over it, in my opinion. But gotta wait for confirmation here. The thing about these stocks, when they're so oversold like this, they can catch a little squeeze behind it. All right, let's look at a couple of other stocks here. And I'm way over time here, so I have to just run through these. All right, first you got DEC. A nice coil here. I'll wait for confirmation always, but this one looks like a nice coil. It's John Deere. Okay. One of these stocks above the moving averages, but above the short term, but below the 200-day. It's in a coil. Gilead. Pull back to the 200-day. Okay, watch this one with the biotechs. Biotech's been acting weak, but if this gets any strength, any bounce, you want to watch Gilead. Okay, here's Cisco. Oldie but a goodie. This one above all the moving averages, including the 200-day. So if we get a little bit of large cap outperformance into that change that I was talking about in late November, early December, when the small caps tend to start outperforming, doesn't mean that the large caps can't move into that. So this is a nice one to look at, Cisco. And finally, ABAX. Okay, nice impulse. Since then, it's a nice bull flag form. Right, a little bit of volume kick up on Friday, even though it was an inside day. That's what got my attention. When I have an inside day with an increase in volume over the previous day, and in this case it was previous 2 days, that puts me on watch. Wait for confirmation. If it decides to dip down, you cross it off the list. All right? Have a great trading day on Monday. Talk to everybody again on Tuesday.